Well, hello, all you trader nerds. How are you doing? The market is down almost 1%. Oh, behave. Which means it was a great time for me to do what I did yesterday. Okay. Now, I know some of y'all are saying, Bobby, you went off the reservation yesterday, maybe a little bit, but I meditated and prayed over it, and I think I did the right decision. So, what I did yesterday, going into this debt limit fiasco that we've got going on, it wasn't like I did back in COVID where I said, okay, I'm putting all hedges on and, I was right. But I got a hunch that this may be a little more serious than what these people that are leading our country in both Congress and the presidency are capable of understanding. So what I did was I eliminated all of my naked positions in my 111s and 112s. And amazingly, I closed all of them at a profit. Every single one of them was closed at a profit. So I closed all my naked puts of my 111s and 112s. Then what I did, I don't mind showing you what I did. Let me show you. Because I didn't do it together when we were together. Maybe I should have done it when we were together, but we were running a little long yesterday. So what we did is, you see, I just closed them all, right? So I closed all those. And then what I did is I said, hey, baby, what did I do? Oh, field. Let me do my field orders. Yeah. So then what I did is I sold 5 put credit spreads, and I sold 4 call credit spreads. So I brought in what, 760 on the credit spreads there. And I actually did the same thing in both accounts. Let me show you in both accounts, even though one was small and one was large. I did the same number of contracts. You can see here, I did the 5 there in this in here, and then I did the 4 there. So what that left me was abnormally low theta, and I'm fine with that. And now I'm able to ramp up in this little debt fiasco. So that's what I did. So, yeah, I really did that, and I'm happy to have done it. And apparently I did it at a really good time. Now, interestingly enough, in the freehand account, I didn't do that. So maybe we'll be able to see the difference between me doing that in one account, not doing it in the other account. So let's see how we're doing in the freehand account now. Oh, first of all, let's look at this. Okay. So now we're hitting the 50 daily moving average, simple moving average. So there may be a little bit of support there. We'll see. You see my line of support and resistance didn't serve as much support at all, flinged on through there. We'll see if the 50-day moving average serves as support or if we continue to flow down here. Interestingly enough, Big Green Monster is beautiful. We thought we would pop up. We didn't. We then got into an overbought condition. So from an overbought condition, we came back in and did fill some of these gaps like we thought was a chance that we do. Now the point of control is here. And where could we go? We could go as low as the 40.94. We would expect that to be a level of support. But I don't know. This may be overdone. We're at the 1 standard deviation move down. So, this is a magnet. This is a magnet. These are magnets. So we'll see if we find a little bit of support in this area here and then go on to fill these gaps. So very, very interesting with the Big Green Monster. Now let's go to the old accounts here and see how we're doing. 36,850. 36,850. That doesn't seem right, does it? 36,850. Let's see. 36,850. Oh, yeah, we're down about $500 then. That's good. 36,850. 36,850. 36,850. Now remember, this is the one that I did not take the nakeds off in. No, we just left them on there. So we're down $504. Okay. Now, that's a pretty big move, right? Because on a $36,000 account, being down 1%, we thought we'd be down $368. That's a pretty big move. Let's see what our Greeks are in this one. Let's see. Get the right account, Bobby. So we're 53.52. How about that? 53.52. Greeks and ratios. 53. 52. So my theta went up. We're at 0.14. Oh, did VIX get back up to 20? Is that indeed the case? Let's see what VIX says. VIX, baby. It is at 20. How about that? My spreadsheet works. All right, VIX is at 20, not 50, 20. All right, and my buying power is 7055. Well, y'all are quiet today. 7055. I saw y'all had a poll going on whether I should wake up 15 minutes early or not. I'm telling y'all, it's all this stuff with the kids. And those of y'all that got kids, you got graduation, you got practice graduation, then you got the baccalaureate at the church Sunday night before, and then you got the honors and awards ceremonies, and then you got the breakfasts, and you got the, oh my God, it's just too much. And then you throw in the honors day for the middle school I had to go to, and the honors day for 2 classes. And then you had this old gal giving some speech on some foundation, and I actually timed her with a stopwatch, and I'm going to go, oh my God, will she not shut up? It's just amazing. All the stuff I had to endure. And now the kids are out of school, and you'll probably hear them screaming and crying in the background. Hush up, you kid. I'm in the class. Hey, baby, what's wrong?
I'm just going to take a nap.
Oh, you're just going to take a nap? Oh, Daddy might take one with you. So as soon as I get finished here. So they're home for the summer. Y'all know what chaos that brings. So look at us, y'all. 53. That's almost getting a little too long, right? Our theta's fine. Everything looks fine. Let's look at the whole portfolio. Look at this, y'all. Got a little speed bump to the left. We got a little bit bump to the right. Everything is looking all right. Daddy, how does Daddy do it? How does Daddy keep it in the middle? Even on a down day of 1%. We've only got a 79% probability of profit.
You said you weren't going to say cuss words.
I didn't say a cuss word. What did I say?
You said the D word.
I said the D word.
Yeah.
I don't think, did I say the D word? My apologies. I did not mean to. I'm a reformed man. And last night, guess where we went?
Well, what do you say we get thrown out of an Applebee's?
Yes, we did. We had a party of 9 last night. Ripping it up at the old Applebee's right before the graduation ceremony. Mm-hmm. And y'all be proud of me. Guess what I had? Yeah, Daddy, the D word. Guess what I did at Applebee's? I had the chicken tortilla soup. That's it. Like 280 calories. Everybody else eating like a hog at slop. Not me, baby. 200. But then when I got home, I had 2 hamburger patties, 2 biscuits, and a bunch of cheese. Because I was like, Beth said, you should have eaten more at dinner. I was like, yes, pick up there. But we had Chinese buffet yesterday for lunch. So I was already stuffed. Anyway, I digress. So this portfolio looks really, really good. And then if you go and look at our ES positions, let's see how those look. Oh, no, we don't have any ES positions. I thought I did have ES positions. What the crap? What the devil? What the crap? What the crap? Oh, okay, here's my ES positions. 523. Today's 524. I got a dentist appointment tomorrow to get the rest of my fake teeth that are up here, my crowns. So that'll be interesting. So look at this, y'all. I feel like James now that we've got this little thing going right where you go, okay, my job is to keep this thing perfectly into center. And looks a little too far this way, doesn't it? Looks a little too far this way. So what would you do? Well, our deltas are getting a little high, but there's really nothing to do. If I wanted to do something, kind of play this little game, I would put something maybe on the call side to get those down a little bit and get this more centered. But I'm not necessarily playing that game. I'm not necessarily playing the same game James is, but it is kind of fun to watch. It really is fun to watch. All right, so let's go to the next account. See how it's doing. Now, remember, this one is the IRA account. Did we do as bad as the other account that I didn't make the adjustments in? So here we're at 85,174 or 175, 85,179. Let's see what that is. 85,179. That's down pretty good though, isn't it? 85,179. It's a pretty good move down, y'all. I got to admit, that's more than I thought. 541 though is not 1%. So we're doing better than the market in this one. 524.23. I'm a little surprised that went down that much. All right, so let's see our friction ratios. Over here, we are at 50. Oh my gosh. Oh, that's because I got those negatives now. So we got like 97 minus 49. Unbelievable. What is that? What's this like? 40, 97 minus 50 would be 47. So what's that? 46 or so? 48. We'll say 48 and 41. 48, 41. See what that looks like. 48 and 41. 48 and 41. Everything looks good there, except my theta is low. VIX is at 20, which means I can use more buying power. And I could do naked positions if I wanted to, right? I can. Buying power is 14,564. 14,564. So we are at 17%. Wow. Wow, 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 wow. Look at this, y'all. It's almost like, I could do anything I wanted to in this account because I don't have enough theta. I don't have enough buying power use. So let's see what we want to do. First, let's go see how those ES positions. So we know what MES looks like. Let's go to the Analyze tab. Here's my ES positions. Look at this, y'all. It's a thing of beauty, isn't it? Thing of beauty. If we look at our ES positions, let's see, 98 positive deltas. So we're long there. We are got good data. So let's go back here. Analyze date 524. There we go. 524. Everything looks really good, nice and centered. So, what do you do? Well, I think we could do what we've been doing and continue with the spreads, even though I could do a 111 or 112. Let me go look at my open trades and see if there's anything that needs managing. I don't think there are because we closed all of those puts. So I'm left with, look at this, y'all. Look at these great debit spreads that I've got. Let's see. Just show the open stuff. We've got great. Look at this, y'all. Debit spread, debit spread, debit spread, debit spread. Look at all that. And then we got just a few credit spreads. So what does our MES look like? Let's go to MES. We don't have any oh, there. Look at that, y'all. Wow. Waka, waka. So let's see what the whole thing looks like. Hide simulation. My microphone gets in my way. I can't see everything. Portfolio beta weighted. Here's our portfolio. What do you see there? I'm not sure. Let's look at the different expirations. And let me see what that looks like. 4 expirations. It's just hard to tell stuff over here, isn't it? Hard to tell. What, let's see, P&L day. There we go. So we're 6-1, 531, 524 down 246.75 on the day. Okay. So everything looks good. Now, what we liked about this, remember the reason we started putting on the credit spreads is I was a little concerned about if we were in this low volatility environment to have a big, humongous spike, right? So let's see what happens here. It says now, if we were to go down 12%, we'd be down $10,000. That would hurt in an $85,000 account, but it's not overcomable, right? And we'd be down $25,000 if we went down 20%. Now, again, that's kind of painful. We don't anticipate that happening. But the reason that we made the changes, and I want to make sure everybody understands, okay? If we look at the vol steps down and we go down to the 12% down, look at that, y'all. We would probably be at, what, 15,000 down there, right? Compared to 9 without the volatility. What would we be if we went down to the 20? Here's the 20. Here's what I liked. Ew, you had a huge drop, right? You're down 22 to 24,000. Look, which is equivalent to the amount that we'd be down without volatility. That's why we made the change. If anybody needs to know, I feel like I'm trying to justify my actions in front of y'all, and maybe I need to. And I think I need to, and that's why I made the change. Is it the right change? Only time will tell, but I wanted you to know my logic. Logic is I'd rather these numbers be correct rather than going, oh my gosh, remember when we had all this, the naked components down here? This was $40,000 and $50,000 down here. You know, huge detriment to the downside if we indeed did default on our debt and the market just went ballistic. Now, I'm not as confident that that's going to happen. So I'm not just going, okay, close everything and let's just put in Sweet Bobby hedges. I'm not like I did in 2020. I don't feel that confident about it, but I did feel worried enough that at least I needed to get rid of, let's see, when did you get rid of your naked puts? Did you keep your PDF put debit spreads on? Yes, I did it yesterday. So yesterday I closed all of my naked puts. All of my naked puts. See them here? Closed them. And I closed them all at a profit. Every one of them. Not a one of them was closed for a loss. That was a good thing. Now, some of them were only like a 14% gain or something, but a lot of them were around 50%. And I closed those. And then I left the put debit spreads on. So, Pumpkin Man, you can see the put debit spreads are here. Let me show you. MES, let's do single symbol. This is what I'm left with my put debit spreads. Isn't that great? Let's just do 4 expirations. There we go. Got beautiful, beautiful, beautiful put debit spreads, giving me protection to the downside. Okay. So what do you want to do? What do you want to do? Well, we need a little theta. Why don't we go to the trade tab? Kind of liking these ES trades. I'm kind of digging them. All right. Now, I had a hankering that I was going to do a micro trade and just do one every stinking day. But then I started looking at the commissions and I go, that's just a little much, Bob. I don't think you need to do that. So what I like doing, let's go to this 86-day cycle. Let's go to the 9 or 10 delta. And when I say delta, I'm saying probability of being in the money. That's what I use. You use whatever you use. Okay. So, oh, wow, look, my longs are my shorts and my shorts are my longs now. Look at this. Now, because the market fell 1%, I'm able to get down farther out of the money. So why don't we do this 3,500, 3,400. For about $5. And that's about what we've been getting these things for, right? So we may have to go down to a little bit. Let's see if we can get filled here. Well, let's build our theta back. Here we go. So that was a 86-day, 35, 34. Now the new spreadsheet should be able to handle this. Let's see if it does. Yes. Probably should have done 2 contracts. That's fine. We'll call this put credit spread 5. God, I can't even remember what it was. Old age is a thing of beauty. My daughter was asking me today how old I was going to be when my youngest daughter graduates from high school. I said, shut up. Shut up. I don't want to even know. Unbelievable. So we got the 3,500, 3,400. I got a late start. I'm a late bloomer. And y'all may not believe this. I used to not be hot. Well, I mean, I was kind of hot, but I mean, not as hot as I am now. Like, you know, like super, like, you know what I'm saying? I mean, y'all saw me that we're in Atlanta. I mean, I'm a very attractive young man. Well, young is a, figure of speech. Credit spread, 86 days, 5, 24, 23. And what do we get into this for? $5. Ta-da! We bring in $246. It's kind of why I like it, right? As compared to what we were bringing in with the 112, 111. Because, we're bringing in, $50 after the whole thing. Now, you're saying, well, wait a minute, Bobby, you're not doing a put debit spread? Okay, keep in mind one thing. Let me draw it. Bring out my little drawer here. I said, let me bring my drawer out. All right. So, in a 111 or a 112, right? In your 111 or 112, you have a naked put and then a put debit spread, right? 1 or 2 of these, right? 1 or 2 of naked puts, put debit spread. So your hedge is over here. This is kind of the hedge to your income trade. Now, I know a lot of you are thinking, well, Bobby, you just abandoned what was working for 112. Now, I don't think of it that way. The put credit spread is this. You still got this naked put. We're going to call it a naked put. But instead of putting your hedge over here in front of it, you're putting your hedge down here by buying a loan put. You see how similar that is? Protection here, this, with virtually unlimited downside risk. But credit spread, you're putting your short here. And instead of putting the PDS up here in front of it, you're putting your protection below it so that you have now defined your risk. These are very similar trades. Got a hedge, unlimited risk to the downside. Well, to zero anyway. Hedge here, instead of in front of it, you've got, okay, we've got, you defined your risk to the downside. But the entire thing is a very similar thing. We are still premium sellers. Where do you want your hedge? You want a little hedge in front of it? Or you want a little hedge below it? That's all. We didn't abandon anything. Same strategy, selling premium. Glenn says, I didn't have atrial fibrillation until I started seeing Sweet Bobby every day. Isn't that great, Glenn? I mean, think about it. In other words, Glenn, I know what you're saying. I make your heart flutter. And I know, Glenn, that's fine. Hey, your significant other's probably a little jealous. I got it. You know, you're not the first one to. Yeah, indeed, I know, Glenn, you ain't telling me nothing. Look, when I walk by people in the gym, both men and women, they either want to be me or be with me. Kind of incredible. You know, I make a lot of heart flutter. Now, so what were we doing? So we got our little put debit spread in, or put credit spread in, and reluctantly, I have been saying, let's get a little bit of premium from the call side. You want to do it? Let's see if it works. If it doesn't, we'll abandon it quickly. Trust me. So let's go over here. And I did a back test as well. I'm not just blindly following James. I did a back test of doing the 10% calls and doing 6%, 8%, everything. And the 6% worked really well. Not as good. The 10% didn't work as good, y'all. I'm just telling you. But if y'all want to do the 10%, knock yourself out. I kind of like going down here, you know, to this 6% probability of being in the money. So let's see. We could do the 45.75. 6% probability of making money. So we could sell the 45.75, 46.75, and get about $2 of premium. $2.90. Look at that, $2.90. Will that fail? I don't know. Let's see. Okay, so Glenn is okay. So Brett closed out of his calls today. Make a note that you're selling call spreads in a down market. Not sure I would do that. Well, let me think about it, because I really appreciate your input on it. I really do. So I could see either way. You know, what are your deltas? Are they high? Are they low? Are they, you know, what is it? And what you'll find out. Let me see here. Let's pull this up. Let me go to Google Drive. All right, go to Google Drive, my drive. Let's show the spreadsheet. What I was doing oftentimes is with these ratio strangles is I would be selling more on one side or the other. You see, I sold 2 calls to 1 put. And in this scenario, what I was doing is kind of interesting. I was keeping 1/2 of my delta. So I'd have -1 delta to -2 vega. That's how I did this count when we did the whatever 48, 50%, whatever it was back in 2016. So I was oftentimes selling calls on down days. Because what happens, y'all got to understand, what happens to your deltas when the market goes down? When the market goes down, your deltas get larger. So in order to keep my deltas -1 to -2 in my Vegas, I was often selling calls on down days. And I was often selling puts on up days.
Jump in here.
Hey, Evan, how are you? Hey, Evan, we missed you yesterday. It was like, where's Evan?
Yeah, it was the one day I wasn't around, and it seems like everything has completely changed. So I don't really know what happened. But on today's topic, it seems like everybody is fearful right now, and has really changed everything up. So I would agree with Glenn. I wouldn't sell calls on a down day, or I wouldn't sell puts on an up day, personally. So I guess my question is, if everybody is so afraid of the market being crazy and theta is a measure of risk, why would we put on more risk today? Why wouldn't you just close a position if your delta is too high? Why do we have to add a call on a down day? Why not just take something off?
Well, I don't think there's anything to take off because.
Well, there has to be. If you have 50 delta or whatever it is, there has to be something you can remove. You have open positions, right?
Yeah, I got open positions, but why would I close anything? What is there that would say close anything? Let's
Well,
go
if
back
you're
to our
comfortable,
original.
then if you're comfortable with the position that you have on now, but you are afraid that the market is going to do something crazy, then why would you put on more risk?
Well,
It
I
just
think
seems like we have two different trains of thought here. Like you're saying you're comfortable with your positions, but you're not comfortable with the market, but you're willing to put on more risk, which means you're not comfortable with your positions or you're not comfortable with the market, right?
yeah. So I think the word that you use, afraid, I'm not afraid at all. What the thing that I did yesterday, and I told Ed this, I said, Ed, what I did was not out of fear. What I did is I tried to do what was best for my account. Not that I'm afraid. I mean, if we, if we don't get the debt ceiling increase, whatever, and we default on debt, I'm not afraid of that at all. But I do want to put my account into the best light so that it does as best as it can. But it's certainly my decision, and what I did yesterday in closing those was not out of fear. And here, Evan, look, my deltas are not out of line. I mean, I could be
Why do
as
you
high as
have to put on more? Well, I guess your theta's low, right? So is that
Right,
why you're
my
trying to
theta's
put
low.
more risk on, or?
yes, my theta's low. I'm gonna put more risk on.
Okay. Yeah, I guess if you're basing it just off of theta, then that makes sense.
Yeah. So, but I see your point on the call side, and I still, and two, that looks good. And let's go back. Let's see what we look like with our ES positions now. There's ES. And look at that. It's a thing of beauty. I don't need anything necessarily on the call side. Things look really nice. If you did put something on the call side, it would just move your entire little structure a little bit to this way, right? That's all it would do. Instead of here, you would go, I'm going to move that here. We're going to move that here. That's all it does. Nothing to do. So I had a little thing. But you know what? I kind of like that you guys kind of challenged me on the call side today. And that's not necessary. Look at that. There's no reason that I have to do that. And I've already brought in more money than I would have on a 1-1-2. And instead of putting my hedge up here, I put my hedge down here. So let's see where we're at now. Let's look at our new stuff. So now we're -50 and 108. So what is that? 58. We're 58, 59, 44. 59, 44. Let's see what that looks like. 59, 44. We added $3 of theta. I would like to add more. So great thing is now, in the event that we still have downward motion, I can still add positions and layer them in. I probably shouldn't have done like 4 or 5 like I did yesterday, but I wanted to get some decent theta on. But now I am fine with just saying, look, Bob, you just do what you can to increase this. Is that just 44? Yeah, 44. 44. So we went up a little bit there. I'm fine with that. And our buying power is 14,728. Let's look at that. 14,728. So that didn't go up at all. 17.29%. I'm good. So I'm actually saying that I want to take more risk as this thing continues to play out. And surely to God, before they go home on Friday, we got 2 days of this nonsense before they really have to get this resolved before they go home for Memorial Day. And we'll see. We shall see. All right. So y'all talked me out of the cost spread. Y'all talked me out of it. Absolutely. Very good. I appreciate that. Let's go to the final account. Here we go. And we are, let's see how we're doing here. How much are we down in this account today? 35,714. 35,714. This one didn't move at all. Look at this. 714 on a 1% down move. Beautiful. 524.23. Breaks and ratios. Here we had a little negative delta. That may be the reason. And now we are at negative 45 and 38. We are negative 7 deltas. Good. Negative 7 deltas and 13 theta. Negative 7, 13 theta. Negative 7, 13. Beautiful. 20. And our buying power is a measly, let's see, 409 there, 81 there. So 81 minus 4 is what, 77? 7,700? Beautiful. We can take advantage of the increased volatility today. We can do that on the downside. Let's go back to the other account. Let's snag that order that we got filled over here. Create a duplicate. Confirm and send. Put it in the Crimson account. And swing better. Yes, hallelujah. So let me go put that in my spreadsheet. We'll copy it from over here. Hello, Beth.
It's me.
Oh, hey, Abby.
Hey, Dad.
My new high school graduate. Okay, y'all listen to this. Where have I failed in raising my kids? So last night, she's getting, all these $100 bills slung at her, all these checks slung at her. And we said, okay, Abby, we bought your thank you notes. You're going to have to buy the postage. She immediately went into this like, oh, God, I can't buy the. And I'm like, what are you talking about? She was upset that she had to buy the postage for her thank you notes. Unbelievable. I mean, what kind of, where did I go wrong?
Dad.
Well, I'm just saying, and finally she's made her little thank you notes out there, everybody, and she's sending thank you notes, and she's going to buy her own freaking postage. But I'm really proud of her. So we made her deposit today into her checking account. This is why one of the reasons I was running late. We had to stop by the bank. So we stopped by, and she did 10% into her savings account, and she did 10% into her Vanguard account, where we immediately bought VOO. Every time she moves 10% into investments, 10% into savings, and the rest is there for her to consume or spend, and she's doing really, really good. So she's made like $30 this year on her little Vanguard account. I'm really proud of her. All right. So as much as it seems like we've made a major pivot, I want everybody to know the game. The game comes down to this. It comes down to this. This is where the decisions are made. I don't care what you're putting into this thing. This is your decision-making process right here. Keeping this in line. Keeping this in line. Could I put a trade on today? Yes. Why? Because my theta is low. Wait a minute. I thought you're scared about the market. No, I'm not scared about the market. I want to put my account in the position best, so it's best likely to benefit from what could possibly happen. So we got a 1% move down today, y'all. That's a pretty good size move, right? Not considering what we've had over the last couple of years, but it's a pretty significant move down. And so we take advantage of the movement. We are able to put on additional trades, and that's what we did. Probably should put on two. Probably should step it up a little bit because my theta actually decreased. I want to see this thing start to go up. But, don't go crazy. Don't go, well, I'll just put 18 of these on today. No, we don't need to do that either. Let's just slowly see what we can do. Put some trades on. Everything's fine. Everything's good. How are we doing compared to the market? We're catching them, y'all. 6.68, 4.88. We're going to get them. It's just a matter of time. We have this thing go down a couple more percentages. We got them. We're going to get them. Trust the process. All right. Good, Brett. Brett sold some puts today. There you go. There you go. Don't be scared. The vol crush could be beneficial to the call credit spread if the market stabilizes. Absolutely. That's the one thing about the call side, right? Is that market goes up, even though it's going against your calls in movement, it's actually helping your calls because volatility usually goes down. Very good. Those do. Oh, look at Glenn. Admittedly, he's got naked calls in ES today, but it's 0 DTE. Look at you stepping up, Glenn. Awesome. Eliza, how would you get 1/3 the width of the strikes as premium? Number one, Eliza, I would not get 1/3 the width of strikes. I am now poo-pooing on that particular part of the Tasty universe. I'm just not going to do that. So really, I think to do that, you got to move your strikes. You got to move your strikes way higher, right? I kind of like them where they are. It's still a defined risk trade, but it has a lot of the characteristics of an undefined risk trade because we're 100 wide. Just my thing. Now, can you do the 1/3 of the width of the strike? Absolutely. Keep that in mind. You certainly can do that. That's just that's not something that I am attempting to do. Now, here's the thing. I emailed Karen and I said, Karen, how you doing? How's your trading? She's doing fine. I want everybody to know she's doing fine. And she said her trading's doing great as well. Trading's doing great. Everything's doing fine with her. But I almost wanted to tell her, hey, Karen, I'm glad kind of that you're doing the defined risk trades now, because what happened was the blow up potentially that you may have had, who knows what she had, but came from and the spike in volatility, not necessarily the price movement. All right, everybody good? Everybody good?